So today I wanted to take you through the bus portfolio price range projections and how it works and how you can utilize this tool that is available on the Gold channel as well as on the Platinum channel. So let's take you to it. First off, when you log in, if you log in as a Gold member, you'll be taken to this page. And this is a menu. It breaks it down in simple text here or within the different buttons that we have available here. So let's click on the bus portfolio price range projections. This then breaks down how to consider using this tool. And so what I'm going to take you through is the actual tool and how I would approach it if I were a subscriber to Gold and how I use it personally. First of all, when looking at this is based on a mathematical equation that takes in the price and the volatility in the trends of where a stock is trading on a daily basis. Now, I'm going to start out with a 3 month or more trend. So that's 63 trading days of the year. There's 252 trading days. You divide that by four, and you get a quarterly look. And it's important, in my opinion, that a stock is trading above that 63 or 3 month period of time because that shows a consistent uptrend in the stock. And so you can see that right here. This is the 3 month more, 3 month or more up or down. So the stock price is above the 3 month trend in this case. So I'm looking at Apple. And then I look at the 15-day moving average as well. 15 days is basically 3 weeks or 15 days of trading, doesn't include weekends typically. And it tells you if the price is above the 15-day or below the 15. But as we can see here, Apple is below the 15-day trend. Why is this important? First of all, if you're trading these stocks, you're looking at a time frame of typically 15 days or less. And so in this case, the price of Apple is trading below the 15-day period, which tells me that it is inching downward, which if I'm going to go long in something, I may want to take a look at where the 3 month trend is or 63-day trend is. The 63-day trend is up, which is great. We want that trend to always be up. If you're shorting, that may be a different scenario. But the 3 month trend is up, so that's positive. We're seeing a pullback below the 15. Now, this is where you get into the comparison between the lows and the highs of the stock. And this is calculated for the day. So it's a 24-hour period that this is looking for. So every morning, this updates. And what this tells me is the low end calculation based on our algorithm is $222.05 on Apple. It's presently trading at $241.99. Okay, well, that's interesting. Now, this also tells me that today's low end versus yesterday's low end is actually higher. So yesterday's low end is here or here, and today's low end is here. So we're seeing a rise, a move up in the low end side in comparison to the day before. And then the high end is actually up as well in comparison to the day before. So in this case, the low end calculation is $222.05. The high end calculation is $251.77. And today's price, and this updates every 20 minutes or so, at $241.99. So the price today, right now, is 8.98% away from the low end and 3.88% away from the high end. So what is that telling me? I combine this thinking. So I start with where's the intermediate trend? 3 month, it's up. That's positive. Where's the 15-day trend? It's down. That's a negative. Where is the low end of today versus the day before? Well, it's up. That's good. So does this mean that that low end is moving up? That's a positive move. The high end is at 251.77. which is higher high, which is positive. So that gives me a little bit of more confidence that the stock price today at $241.99 is getting closer to the low end and possibly will be making a move higher in the near future. Now, the important part of this is then to use your chart and to take a look at your chart and see where your chart is telling you in this as well. So let's go take a look at a chart of Apple and see what we're looking at, because this can be a determiner of what if this is a time to buy this, or should we wait for this percentage away from the low end to get lower. So this price that we're at today at $241.99, can we get closer to low end for a better buy opportunity? As long as we're above that intermediate trend or 3-month trend, we feel good about that, but we want to buy at the low end if possible, and of course, sell at the high end. So let's go look at a chart of Apple. So this is a daily chart of Apple computers. And what we can see here is I'm using the 15-day is the white line, the 63-day is the yellow line. I'm using the Mac RSI, the MACD, and a slow stochastic. And what I'm seeing here on a chart and visually, I can see that Apple is started failing around December 27th, which was a Friday. And since then, it has moved downward. It had two update on Friday, the 3rd of January, and an update on the 6th, Monday, the 6th of January. But today it's moving lower. So are we going to get closer to that $222 low end? If we were to get to that 222 range, we would then be uh, if we got to $222 on the low end, that would say we broke this intermediate trend line, which is a negative. We've broken the 15-day trend line, so that's a negative. If we don't see a move higher and a move up in the near future, then chances are Apple is headed down towards that low end of $222. Now, we did see on the comparison between yesterday and today, which was this is a comparison from Monday the 6th to Friday the 3rd. We had higher lows and higher highs. But today, on the 7th of January, we have lower lows and it looks like lower highs as well. So this is really important where you can use the price range projections, gives you the 30-month, the 15-day, and then the low end and the high end for the day. Go to your charts. We use Trading Views. If you don't have a charting system, Trading Views is wonderful. You can click the link below and sign up for that a subscription to Trading Views. And what it's telling me is I'm seeing lower lows today and lower highs, which I then look at that and I go, okay, this is not the time to buy Apple. I need to see where tomorrow's calculation, which if it calculates today at this point, if the market were to close right now at 2 o'clock Central Time, then it would tell me this is not a good time to buy. We're going to see a lower low and lower high calculation on tomorrow's update. So that to me is I look at this and I go, Apple's not a buy today. Chances are it's got further to go. So it's best to sit on the sidelines. Now, it's important to know you can use this on a short-term basis when it comes to trading stocks. For instance, I used it on NVIDIA yesterday, Monday the 6th. I bought a put contract because we saw the exponential or the big bump in NVIDIA on Monday. I knew they came out with some news that was interesting, and we saw a big bump today in that. They came out with a new product that's targeting gamers, but also gives you the ability to bring the Blackwell platform to your laptop, which is pretty amazing. But you had these two big gaps up. And so what I used the price projection calculation was I saw that the NVIDIA price was getting closer, the existing price was getting closer to the high end. It actually opened up at our projected high end of 153. And then that put I had bought on Monday was actually in the negative, but I knew that if it opened at 153, chances are it was going to pull back. I held out, ended up with a 67% return in a matter of less than 24 hours. And that's how I use the price projections. Now, if you're using it from a long-term perspective, it gives you confirmation on the intermediate term. I also included the 200-day moving average as well in there and a calculation on the Z-score. And that's something else later on. I'll go into what a Z-score is and how that can work for you as well. But in general sense, if you're a long-term investor, this can give you an idea of, is it on a upward trend on an intermediate period of time? Is there a good, better place to buy the stock today versus tomorrow or versus in a couple of days? And that's where you use that low end and high end projections on a day-to-day basis. When I look at Apple and I confirm all this with my charting that I use on trading views, what it tells me is now is not the time for me to buy Apple. I should wait and be patient and look for a basically a support level being created and see how close I'm going to get to that $222 low end, which is below my intermediate trend, which if I saw a pullback that far, which is pretty gigantic, to be honest with you, this would be one of those. This is how I'd use the tool on an investment, long-term investment standpoint. So it can be used on a short-term trading standpoint, and it can be used as a way to calculate when you should consider adding to a position for a long-term point of view. So I hope that helps. Please, if you have any questions, feel free to send me a text. If you're a subscriber, you know what my text number is, and I'll respond to you. But I use this. This is a quantitative method. It is total mathematics using price and volatility and volume in these calculations. And it's no emotions. It gives you the straight answer. So feel free to ask me any questions in the future. I hope you can use this tool to be a better investor, to risk manage, and better position yourself for profitable gains. Take care and always live loud. See you.